Hey guys, welcome back. In today's video, we are talking about banks quietly buying AMC to $30, the new high soon, and many more in this video. First, we're taking a look at this. So AMC today has announced a $150 million offering where they use part of the raised cash towards their Go plan that we talked about in 2024, as AMC was investing up to $1.5 billion over 47 years to improve sight and sound as seen with 4DX upgrades now. So the first news, and is the big news, is obviously we have this offering. Now, bear in mind, we already knew about the offering. We knew that AMC needed to raise money. And there's a good reason for why AMC is raising money, in which we talked about this last year and the year before that, in terms of AMC's plan to improve the current infrastructure. They talked about the 4 to 7 years where they improve sight and sound. And one of the things we talked about, and the AMC has also mentioned this, is one of the biggest things that they have seen through data is that premium movie theaters tend to bring in the most revenue and the most profit. And by understanding that, their aim is to obviously make more premium theaters, to improve the current theaters, so that it improves the revenue even more. So we've seen and we know that with the cash they have on hand and the cash that they are going to raise, with the ability to invest it into their infrastructure, it is exactly what they need to do. This is something that they have already seen working, and they just doubled down on what's working. And so that's why we knew that they had to raise cash. We also knew that the ability to raise cash is very important. And so we are not surprised to see this news. Now, it's also why we've talked about with how shorts also realize this as well. They realize if AMC is able to raise cash, they are able to make good investments, they are able to improve. And that's why they were trying their best to suppress AMC, to limit either how much AMC can raise or how much shares AMC would have to sell. Because we're obviously talking about 150 million. If AMC were to be at $3, we will obviously sell less shares. But because you can see, if we assume our offering price of 1.48, we will sell 101 million shares. But something that we have to know is that obviously the higher the assumed offering price is, the lower amount of shares we would have to sell. Now, another thing is this. Many people are thinking now, because AMC is offering, and we are seeing a 9% drop today, that everyone is leaving AMC, that everyone is selling. However, when you take a look at the order flow distribution, once again, you will see that the inflow is still bigger than the outflow. So it isn't to say that there is no selling. However, you have to obviously understand that there is more buying than there is selling. And so to people talking about that, what we see today is because people are selling their shares because of the offering news that we already knew was going to happen. It's clearly not the case. This is, once again, in my opinion, just the ability that these shorts have to make AMC drop and make people believe that it's because of the news that's being announced. This isn't to say that the offering has had no effect on AMC, but the fact that the order inflow is showing that there are more buying than there is more selling, and the AMC price is still going down, that itself is already suspicious, and we know what's going on. Because when you take a look at another thing, we have 6 different JP Morgan fund managers starting Q1 2026 off, right? They're all loaded up on AMC with long shares, where there are now 2.73 million shares across 6 funds quietly bullish. So whilst you see all of these articles talking about AMC, and we've talked about this before, you have to realize there are people quietly buying, and it's in their interest to buy not only as much AMC as possible, which we've seen them do, but also as cheaply as possible, because they want to firstly push retail investors out, and secondly, they want to suppress the ability for AMC to raise cash. Just like what we talked about here, if AMC's offering price was $3, $5, and $10, we will still raise the $150 million, but at a lower amount of shares. And so that's why they know with the AMC price going up, it limits their ability to buy as much AMC shares, because AMC will only have to sell less shares for them to raise the amount of money. And so that's why we're seeing these guys quietly buying and trying not to affect the price. And I think another important thing to realize, the demand for AMC shares, is whilst we're talking about AMC doing an offering where they're offering out potentially over 100 million shares, we are still seeing the shares availability go to zero. So this is at a time where we know there's going to be an abundance of AMC shares, yet they're still borrowing as much shares as possible. And I think that really just showcases what is going on. That showcases the demand for AMC shares, and also the fact where some people have the problem, they have this thought of, because AMC is selling 100 million shares, this whole thing is over. Shorts are going to fully cover. But you have to realize is that if you've done your research, if you looked at the data, or if you are someone who just thinks that there are a few billion, at the very minimum, synthetic shares out there, how would they be solved by just 100 million shares being offered? Even if these 100 million shares were to entirely go to one particular short seller and they cover their short shares, there are still billions of shares that are out there. And I think the fact that they are still borrowing these shares is just a showcase of how even 100 million shares is not enough. And you can see, to all AMC investors, there's one thing to keep in mind at these lows. If the need for AMC share prices to be this low wasn't there, we would see that 80% or at least above 50 on the lit exchanges. There is no need for AMC's shares to trade down here. Even with 80% of the volume being traded off exchange, the stock still had over 40 million shares trading in one day. They are in trouble. All this tells me is that over the last few weeks, it's been hard for them to keep it down without taking more and more volume away. Now, there's a very clear indication of this as well. One of the things we've shown is during this time, from the 9th of Jan and the 12th of Jan, when we saw AMC go up 13% and 5%, the dark pool volume was at 60%. But then, when they realized that 60% couldn't contain AMC anymore, you see the very next day with a red day, but coincidentally, the next day where we saw this red day, we then also saw dark pool usage go from 60% to 70%, and as the time went by, we saw that 70% go into 80%. And then we saw the price declining. Even though we've had more volume, even though when they were at 60%, we saw the price go up. So this is just really showcasing in terms of the ability that's happening right now with this whole situation and how they're struggling to keep volume away, because previously they could have kept AMC down 60%, but now they can't. And when they could keep AMC down 70%, they realized, but then we beat them as well. So they realized they had to go to 80%. And that's just the trouble that they're in. And you can see we're seeing how we're starting the day off with 73%. And I think it's just the big contrast that you can already understand here with how 17.6 million volume is routed off exchange and only 1.9 million has hit the lit exchange, or at least NYSE. And that just showcases what they're doing. That showcases the suppression that is happening, but also the struggle that they are also facing. Now you can see from this user, I expect AMC to reach my top end forecasted target of $10 to $14 and break with momentum into the 20s. There is a chance of AMC breaking to the 30s either in the first leg extending to next month or in the next leg if sufficient momentum is not achieved. Now, his reason for this is because using his understanding and his thoughts is that the fundamentals of AMC should mean that we should at least be at $10 to $14. And this is something that we've said all the time. Because we don't even get real price discovery to even let the market dictate where AMC should be based on its fundamentals, we never know a true target, but everyone has their thoughts. But we know one thing is that AMC is definitely undervalued. Now for this particular user, he's obviously saying $10 to $14. And so that's where he thinks fundamentally where AMC should be. And then he talks about how once you get to $10 to $14, bearing in mind AMC is at 134, we then will see the momentum and the unwinding of shorts taking AMC into $20. And we've already talked about this. We know that there are short sellers who have their positions at $2.10. We know they have short sellers who have massive positions at $3, even higher. And so as AMC go higher and higher, these guys with heavy short positions stuck in these price points would have to unwind. And so you can obviously understand it as we see AMC go up, this short sellers have to cover. Again, goes to the next spot because of both unwinding and just the fundamental momentum. And then they have to cover, and then AMC goes even higher, and then process goes so on and so forth to where this user targets $20. And then he says at $20, when the momentum fully kicks in and it breaks out even more short sellers, just based on pure momentum alone, it's going to take into the 30s. Now, everyone has different price targets. I've obviously said in the past as well. And, I'm sure everyone won't look at this in terms of agreeing with his price target. However, there's one thing we have to realize is that the context behind this is absolutely correct, or at least I personally agree with this. Whether or not you believe AMC should be $10, $14, or even higher, and I understand where people are coming from, it doesn't take away from the fact that AMC is undervalued. So if AMC were to be in the hundreds, it will still be the same thing, where fundamentally they should be in the hundreds. And then the momentum will allow them to go into the upper hundreds, so 7, 8, 900. And then that momentum will take them into the thousands, which would then obviously cause the squeeze, where the squeeze momentum will then take us into the tens of thousands. And so that's what we talked about. So the context, the whole things behind this is what I agree with. And, I do believe that we can still easily see AMC going to the 30s just because of what's happening. You can also see that right now we're seeing how Goldman Sachs are saying the biggest short build in a decade. So they are trying to say that they are increasing the short stocks, where notional short selling across single stocks last week was the biggest on record. And so this is what we talked about with how they're increasing on short positions. Once again, when you take a look at AMC, this isn't done by selling, this is done by suppression, by shorting, and many more. But not only that, when we take a look at what's been happening throughout the last 2 months, they have traded 3 AMC floats since December the 1st, barely 2 months, 1.65 billion shares in a 500 million share float. And so now today they have almost pushed price down 10% on 3 million shares on news that everyone knew was coming. So this is what we talked about with how we understand how clearly there is manipulation and suppression that's going on within the market. But then not only that is that AMC prospectus gets GME to drop. Dang it, Adam, diluting GME. People are blaming on Adam Aaron. People are blaming on AMC with the share offering, but how would AMC dropping have any effect to GME dropping? But yet the two things happen. And this is something we've seen so many times. When AMC goes up, GME goes up. When AMC goes down, GME goes down. And vice versa works as well. But the question is, how is 2 stocks who are in completely different industries, who have no relationship between one another, how are they affected at the same time? And that's because the short sellers are in both sides in terms of shorting AMC and shorting GME, and they get capital gets affected. And so when one goes up, the other goes up as well because of the illiquidity issues that these guys are facing. And you can see here in the US, it is legal for market makers to naked short. In the US, every major institution is a market maker, which equals to, in the US, it is legal for every major institution to naked short. And this really just sums up the situation that is in the US market, talking about how basically it's not fair for retail despite what they claim to be, because institutions can abuse these things every time they get something wrong. Now, when we take a look at HYMC, we're also going to very likely be looking at new high soon. We're holding up while I'm ready for retest of 40s. We see HYMC go up 12% today. Gold and silver are both in clear uptrends. We are in a good position. Now, this is good for both AMC and apes, because I know that a lot of apes have bought into HYMC, but also we know how AMC has invested into HYMC. So this directs with their earnings as well. And you have to realize, physical metals ripping. Now imagine the leverage. HYMC sits on the largest undeveloped silver and gold deposit in the US, and that's why we talked about how it's going to be when everything is showing, when they look for who has the best ability, who has the best exposure, it's going to be stocks like HYMC. We can see that this is the news already happening, where gold officially reclaims 5,000, silver rises back to $80 per ounce. It went obviously even higher, but it's just showcasing what's happening. And we're seeing how physical silver is backing paper shorts into a corner. So you have to realize what is going on. Furthermore, we're seeing, and you can see this from Goldman Sachs again. So it looks like to me how Goldman Sachs are in a bad position. So they talk about how risk rises for Bitcoin, gold, and silver as Goldman Sachs warns $80 billion in stock selling. So firstly, they're warning stock selling because they want the stock price to go down. But we also saw from here how Goldman Sachs just talked about that the notional short selling across single stock last week was the biggest on record in Goldman Sachs group. And so this is obviously linking up to why this is happening. And probably very likely is that not only do they have exposure to the metal commodity futures market, but also probably have been shorting various different firms like HYMC. And so they're worried about what's to happen when we have companies like HYMC go up 12% in a day. You can also see, we talked about how precious metals are back on rise. You can see silver reached $83 and even higher today. It just really talks about how people haven't left silver and people are just trying to make it look like, everyone's leaving when that's not the case. If we take a look at Wells Fargo, they just bumped their year-end target from 6,100 for gold to 6,300. So it really just talks about what's going on. And then if we take a look at across the globe, what we have is more Bank of Japan interventions in terms of the liquidity issue that's happening. Now, this is something that we need to talk about multiple times because it is very serious, because it does got to do with the US as well. And they're calling it one-off market operations, but they've done this plenty of times. And it just showcases why this is happening as we see the 2-year Japanese bond yield climbs to 1.3%, highest point in nearly 3 decades. So this is why you're seeing the interventions like this happening. We're also looking at US dollar sell-off. And once again, it's kind of going back to why people are buying into gold, why people are buying into silver, because we're also seeing the US dollar falling. And then you're also looking at how US recorded over 108,000 job cuts last month, the worst January since the 2009 global financial crisis. So there are so many things happening right now. People are trying to obviously find the safe haven, being AMC, being HIMC, being silver and gold. And so you understand what is going on. As always, none of this is financial advice, so do take our second salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.